Hello, I'm Neil Whelan, and welcome to the Wesleyan Podcast. In this episode, brought to you by Wesleyan Financial Services, Monica Pacult talks to specialist financial advisor Will Adams about income protection for teachers. They'll talk about how you'll insure your home and your car, but often overlook your most important asset, yourself and your income. And these products are designed to pay out if you're unable to work due to illness or injury. Before I hand over to them though, this is the reminder this podcast is for information only and doesn't constitute financial advice. But if you do need to talk to someone about your income protection or any other financial needs, I'll be back later to tell you how to get in touch with us. But for now, I'll hand you over to Will. And first up, Monica.
So today we're talking about why a teacher might want to consider protecting their income. So firstly, could you tell me, how does income protection work? What are the key facts?
Yeah, sure. So, a lot of people that I speak to are aware of different types of insurances that might exist. But I'd probably hazard a guess that income protection isn't one, if anything, that people are aware of. We know about life insurances, critical illness cover, but income protection it can be one that's often overlooked. What income protection does, it's an insurance policy designed to support you financially if you are unable to work because of an injury or illness over the longer term. Many people do have sick pay involved in work. However, this is designed often to prolong that, to ensure that if people are off work for any longer period of time, that they do have that protection in place to look after themselves and their families.
I see. Thank you. That's interesting. How can teachers and senior leaders then in education benefit from protecting their income?
Taking out some form of income protection is a good way to ensure that any regular outgoings are covered should the unexpected occur. And if you are unable to work due to injury, ill health, it's worth thinking about what would this mean for your finances. Again, some people might think I will rely and I'm happy to rely on the benefits that I get through work. But in my experience, and I have had many clients where they've been off work longer than that, longer than their sick pay. And that can, if they don't have any policies in place, cause a lot of financial difficulty. It might mean not being able to cover the mortgage and the essential bills. So it's definitely something worth considering.
Okay, great. How much cover do income protection policies typically provide?
So the way an income protection policy works is it will pay out a proportion of your earnings, and it pays out in the form of a regular tax-free income. And that's typically around 60% or up to 60%, although this does vary depending on the policy and the provider. Most policies will pay out until you're well enough to return to work and you're no longer suffering from your loss of earnings. So, for example, if you start receiving a pension during that period, is another example where the policy would stop at that stage. Another reason that the policy would come to an end is that you've reached the maximum age that you took the policy out until, or of course, if you pass away. But the point is that it is designed to give you that chunk of income, not all of it. It won't replace your income in its entirety, but for most, it will be enough to cover those essential outgoings. So it's really important that people consider this type of policy, and we can kind of help and support with this.
That's great. Thanks, Will. Teaching's notoriously demanding, isn't it? And unfortunately, we hear of a number of stress-related absences within the profession. Is it possible to get cover for stress-related absences from teaching?
Yeah, you're absolutely right. It is a very common occurrence, unfortunately, that people are off work longer time as a result of stress. And here at Wesleyan, we work with a panel of insurance providers, and ones that we feel meet the needs of our clients. The providers that we use will typically cover for stress-related illnesses, but this is dependent on the outcome of the underwriting process, which is done before the policy goes live. As advisors, we can support you through this and ensure that you get the right cover to meet your needs, because having the right policy that will do what you want it to do is of course, the priority.
Of course. Thanks, Will. Why might a teacher think they don't need to get income protection? What are the disadvantages, if any?
Often, often income protection is often associated or maybe wrongly so, associated with the self-employed individuals. Some people view it perhaps as an unnecessary expense because, as I've already previously referenced, a lot of people think, well, look, I can rely on my workplace benefits. And, of course, it's a policy that you hope that you'll never need to use. We don't want to be off work longer term sick. And of course, people could think, well, look, I'll not pay a monthly premium for this policy and I could spend that on something else. But in my experience, when I am speaking with clients, it's the reassurance that income protection can provide. So I suppose, if there was going to be a disadvantage, it's another outgoing, another insurance that we need to pay for. But what you are getting for that is that peace of mind, that security, that should something unexpected happen, you are going to be in a much better position than had you not had any cover at all. And for me and for many of my clients, that is invaluable.
That makes sense. Some people might assume that senior leaders in education are on higher salaries and therefore, as a result, could potentially have more in the way of assets or savings and investments, that type of thing, and therefore probably won't need income protection. Would you agree with that?
No, I wouldn't really, because very often with higher earners, higher earnings, that does go hand in hand with higher lifestyle costs. We tend to have a bigger mortgage, we might have a more expensive car, etc., etc. So this actually means that if clients are higher earners, that the impact of the disruption of losing an income for a given period of time could be far greater. And something else worth bearing in mind, that often we find that if there is a particularly high earner, that their spouse, for example, or other half might be on a lower income or might not work at all. So the implications of losing that main household income would be even greater in that scenario. And a useful question to ask yourself is that, how long would any savings that you may have last if your income was to stop completely? Just worth thinking about.
What should any teacher or senior education leader think about if they were to take out a policy to protect their income?
So when looking at an income protection policy, it's really important to ensure that the policy is specifically tailored to your needs and provides all the key benefits you require if you do need to claim. Another consideration, along with income protection, is critical illness cover. And again, I touched upon this at the beginning. And these policies will typically provide a tax-free lump sum if you're diagnosed with a predefined medical condition, even if you are able to carry on working. It doesn't necessarily go hand in hand. You can be diagnosed with an illness where a critical illness policy would pay out, but you might still be able to continue working. And often these lump sums can be used to pay off mortgages, adapt your home, assist with changing requirements if you were to suffer from a disability, for example. But it's not an either or situation. I don't think clients should think I need income protection or critical illness. It's a wide spectrum and we all have a different set of needs. And this is why meeting with a financial advisor, that we can assess your individual circumstances, look at what the impact might be of X, Y, and Z, and make sure that we're leaving you in an informed position, if nothing else, regarding your options available, whether it's income protection, life insurance, critical illness, etc.
Thank you, Will. There's a lot to think about there and to reflect upon. Unfortunately, that's all we've got time for today, but thank you for sharing your insights and your expertise and for coming onto the podcast again. It's been really nice to have you back and hope to have you on again soon.
Thanks, Monica. Appreciate it. Speak soon.
And that's our show for this week. Thank you to Monica and Will. If you are looking for expert financial advice, go to wesleyan.co.uk, where you can book an appointment with one of our specialist financial advisors. Charges may apply, but we won't charge you until you've agreed the services you require and the associated costs. Find out more at wesleyan.co.uk/charges. To learn about Wesleyan more generally, you can find us on the website formerly known as Twitter, as well as over on Facebook, Instagram, and LinkedIn. And if you found this podcast useful, you can like and subscribe to us on all the usual platforms, as well as find us on YouTube, where there's a whole library of videos covering a wide range of financial planning topics. But that's it for now. So until next time, thanks for listening.